So really, as you can see, I've done my best to invest my money equally throughout as many uncorrelated assets and investments as possible, so that if something happens with one of them, the other should more than make up for it. And if something happens to all of them, I still have cash on hand to be able to buy the dip. That's why if you want to build massive wealth long term, a lot of it really just comes down to the basics, and that is optimizing your income and expenses, paying down high interest rate debt, maximizing your tax-advantaged retirement accounts, diversifying, and then staying consistent long term. I know it's not as exciting as the idea of being able to make $100,000 a month from dropshipping anywhere in the world from your computer, but it's the truth. And if you could follow this consistently, you're going to be able to build a really strong financial foundation long term. On top of that, all of these strategies are really meant to be as timeless as possible, so that you could save this video and come back to it a year from now, or even a decade from now. And all of the strategies are going to be just as applicable in the future as they are.
As we step into 2024, the financial landscape is more complex and unpredictable than ever. Whether you're a seasoned investor or just starting out, it's crucial to know how to invest wisely and keep your money safe. In this video, we'll cover key strategies like diversification, tracking your expenses, and utilizing retirement accounts like Roth IRAs. We'll also explore how investing in precious metals with trusted companies like Augusta Precious Metals can provide stability in uncertain times. Let's kick things with one of the important principles of investing: diversifying your portfolio for long-term wealth. Diversification is the cornerstone of a resilient investment strategy. As the clip highlighted, spreading your investments across various asset classes helps mitigate risks and can lead to more stable returns over time.
And that, of course, brings me to the next part of the video that could either make or break your entire investing career, and that would be choosing your investments. Even though it's relatively simple, the truth is very few people have the discipline to actually follow it without getting caught up in the premise of get rich quick. So if you want the blueprint to building wealth long term, for most people, this is how you're going to do it. First, diversify. This means that you should never invest all of your money into one stock, into one cryptocurrency, into one place, because if you do, there's a chance that you could lose a significant amount of money. For example, tech stocks lost 78% during the dot-com bubble. Housing prices declined more than 50 to 70% depending on the area, and cryptocurrency fell as much as 99% depending on the project. Point being, you have to spread out your money throughout different companies, asset classes, and sectors, so that if something happens to one of them, you have something else to fall back on. Second, don't try to beat the market. Even though it's tempting to want to utilize alternative investments, pick your own stocks, and try to get higher returns in your portfolio, the reality is almost everybody fails. Like, even the best hedge funds and investors can't beat the market consistently with every resource at their disposal. So unless you work for Congress, I wouldn't even try. Instead, you should try to ride the market in its entirety. And sometimes the most simple approach is also the most effective. Like, third, stick with index funds. A few years ago, Warren Buffett famously said that this is the single best investment for the vast majority of people. And I don't think he's wrong. Index funds offer a wide variety of stocks and industries, they're incredibly diversified, and best of all, they're very cheap to own. For example, Fidelity offers no-fee index funds that cover just about anything that you'd want to buy, and this is also how I'm investing my own money. Even though it sounds boring, most of my stock market portfolio is comprised of just two funds, 80% S&P 500 and 20% international. That's it. It's nothing fancy, but it's stable for what it is, and it covers the entire world. And finally, fourth, assuming you do the above, just dollar cost average and do nothing for a very long time. Unfortunately, I would venture to say that for most people, this is the most difficult part to follow, because even if you get everything else right, if you panic sell at the bottom and you don't keep buying when the market drops, you could potentially miss out on some record profits when the market eventually does recover, and that could set you back a lot. Like, just imagine you panic sold in March of 2020 because you believed the market would fall further and you could buy it back cheaper. You would still be waiting. Or imagine you sold at the peak because stocks are really expensive, and then the market just kept going higher. The fact is, practically every study out there has shown that a buy and hold approach over a well-diversified portfolio long-term wins in the vast majority of situations. Although in terms of how much you could expect to earn from something like this, here's where things take a bit of a turn.
Building long-term wealth isn't just about diversifying. It's also about patience. Holding onto your investments through market fluctuations is key to seeing significant gains over time. The diversify and hold strategy is simple yet powerful, as it leverages the compounding effect and the natural growth of the market. Companies like Augusta Precious Metals can help you diversify with precious metals, offering a safe haven during economic downturns. In 2024, this approach remains as relevant as ever, ensuring that your wealth grows steadily while staying protected.
No matter who you are, what you do, or how much you have invested, everybody I know optimizes for something they're always going to keep, and that would be cash. When it comes to this, the reality is most people have no idea how much money they spend or where they spend it on. All they know is that they have a certain amount of money in their bank account or a certain limit on a credit card, and that's what they could afford. Then when their account gets too low, they cut back on purchases until the next paycheck comes in, and then the cycle repeats itself. But this is not how wealthy people manage their money. So if you would like to optimize for cash, which arguably is the entire foundation of being able to build a lot of wealth, start by tracking your expenses over the next 60 days using a software like Rocket Money, You Need a Budget, Every Dollar, Monarch Money, or even your own Excel spreadsheet, and then log every penny that goes into and out of your account. From there, you could determine if you're spending money on things that don't matter, if you're making short-term impulse purchases, if you're overspending on categories that you could negotiate or get for way cheaper, and then hopefully you could cut back and reduce some of those expenses. From my experience, just by doing this one thing, you should be able to save an extra 10 to 15%, because just like a diet, once you become aware of the details, you could begin optimizing for everything. Without exaggeration, there has never been a better time than now in the last 20 years to make money on your money.
While investing is critical, tracking your expenses is equally important in building wealth. Knowing where your money goes allows you to make informed decisions and free up more funds for investments. In 2024, with inflation and living costs rising, managing your expenses effectively is a must. By keeping a close eye on your spending, you can ensure that your investment strategy is not only sustainable but also optimized for growth. And don't forget, diversifying with precious metals like those offered by Augusta Precious Metals can provide an additional layer of protection for your financial future.
If they go up in value, that's great. And if they decline or are worth nothing whatsoever, that's totally fine too. This is really just the fun category, like the Ford GT, where there's really no expectation whatsoever. So really, as you can see, I've done my best to invest my money equally throughout as many uncorrelated assets and investments as possible, so that if something happens with one of them, the other should more than make up for it. And if something happens to all of them, I still have cash on hand to be able to buy the dip. That's why if you want to build massive wealth long term, a lot of it really just comes down to the basics, and that is optimizing your income and expenses, paying down high interest rate debt, maximizing your tax-advantaged retirement accounts, diversifying, and then staying consistent long term. I know it's not as exciting as the idea of being able to make $100,000 a month from dropshipping anywhere in the world from your computer, but it's the truth. And if you could follow this consistently, you're going to be able to build a really strong financial foundation long term. On top of that, all of these strategies are really meant to be as timeless as possible so that you could save this video and come back to it a year from now or even a decade from now.
Investing doesn't always have to be traditional or boring. This clip introduced the idea of alternative investments, an exciting way to diversify your portfolio further. Whether it's collectibles, real estate, or even cryptocurrencies, alternative investments can provide both enjoyment and financial returns. However, it's important to remember that these investments should complement your core strategy, not replace it. Augusta Precious Metals offers another form of alternative investment with gold and silver, which can be both stable and profitable. In 2024, exploring these options could be a fun and secure way to enhance your portfolio.
Although third, arguably the most important part of this entire video, when it comes to investing, especially if you're just starting out, look into starting up a Roth IRA. This is an account that you can contribute up to $7,000 a year into, and then by the time you're 59 and a half, all of the profit that you make within the account is completely tax-free. Even better, but you're also able to pull out any money you contribute to the account at any time and without any penalty. So essentially, if you make under $161,000 a year as a single person, this is the pinnacle to building wealth as efficiently as possible. As an example of this, for the sake of simplicity, let's just assume you ignore the rest of the video and all you do is just max out your Roth IRA each and every year to the tune of $7,000. If you start doing this at the age of 20 and you retire at the age of 65 while earning an average return of 8% in the stock market, which is something that we'll cover very shortly, you're going to have $3,145,000 invested while owing absolutely nothing to the IRA. IRS. Not to mention, the ideal time to start and contribute to one of these accounts is when you're young and not earning a lot of money, since one, you're probably already in a low tax bracket, so you have more after-tax income left over to invest with, and two, you have decades to let compound interest grow your money into something significant. Separate from that though, in terms of where to open a Roth IRA, practically every brokerage offers one at this point. They take anywhere between 10 to 20 minutes to set up.
A Roth IRA is one of the best tools for securing your financial future. As the clip explained, contributions to a Roth IRA grow tax-free, and withdrawals in retirement are also tax-free, an incredible benefit in the long run. In 2024, with potential changes to tax laws on the horizon, maximizing your contributions to a Roth IRA could be more advantageous than ever. To further protect your assets, consider including precious metals like gold and silver from Augusta Precious Metals within your retirement strategy. It's a powerful way to ensure your money is working hard for you, even as you approach retirement. We've covered a lot of ground today, from diversification and holding strategies to the importance of tracking expenses and exploring alternative investments. Each of these strategies plays a crucial role in safeguarding your wealth in 2024 and beyond. Remember, it's not just about making money. It's about keeping it safe and making it grow. For more information about Augusta Precious Metals, the link will be posted below. Don't forget to like, share, and subscribe to our channel.